Bloomberg Audio Studios. Podcasts, radio, news. This is the Bloomberg Surveillance Podcast. Catch us live weekdays at 7 a.m. Eastern on Apple CarPlay or Android Auto with the Bloomberg Business app. Listen on demand wherever you get your podcasts or watch us live on YouTube.
Well, Stephanie Roth joins us now, chief economist at Wolfe Research. The fact, Stephanie, is I got a 30-year bond. Lisa was talking, it was a 5.11, rounded up, it's now a 5.13. Are the bond vigilantes telling the politicians what to do, and does it then amend your economic forecasts?
I think there might be work that the bond vigilantes will continue to do in the next couple of weeks. At this point, there's not enough that would really change policy, but there's a real reality that we might have yields continue to sell off such that it makes policymakers blink to some extent, but we are
yields
far
higher,
from there.
To be clear, yields higher, price down?
Yields higher, price down, but we are not there such that at this point, the bill will continue to move on until this happens such that it creates a big sell-off in equities. This is not our base case, but there's a real possibility of this.
Is a 5.13 30-year bond an 8% mortgage?
I don't know. It's not good for the folks that are going to go out and try to buy a house this weekend. So, Stephanie, what are you guys thinking about this economy here? I mean, again, as we think about the tariffs, I was just reading a note by Torsten Slok. He makes it very simple. You know, tariffs were about 3%. Now they're on a weighted basis about 18%. That's got to impact the economy. Do you guys have a recession call out there, or do you just have a slowing economy?
We don't have a recession call. We're looking for, actually, growth could be above 1% this year.
Really? Okay.
Somewhere between 1 and 1.5%. So you do have a big tariff hit to the economy. With the rollbacks of China, that was significant.
Yep.
So tariffs could weigh on the economy by about 70 basis points, but the reconciliation bill has a bit of a positive impact as well.
Why?
Because the business provisions do get pulled forward into 2025. So about 20 basis points.
So it has stimulus, like COVID type of stimulus effect?
A lot more modest this year. Next year, we should have actually a decent amount of stimulus from this bill. Combination of the business provisions as well as the individual provisions, things like no tax on tips, no tax on overtime. That really has an impact next year.
So that this all flows down to the consumer, which of course is 70% of this U.S. economy. How is the consumer out there from your perspective?
So far, the consumer's okay. Nothing that bad has happened to them. Yeah. Jobs continue to grow. They continue to have solid wage gains. And as long and unless that changes, the consumer will continue to chug along here.
What's the biggest mystery of your Wolfe Research forecast? You got an Excel spreadsheet. She's awesome at Excel.
Yeah.
She does formulas like no one. What's the biggest hole in that Excel spreadsheet? The biggest secret?
I think the real question is the multiplier effect from the tariffs. So you could say the tariff dollars raised every dollar that gets raised from tariffs has a $1 impact on GDP. That's kind of the more extreme outlook, in which case you could have a bigger negative impact on the economy this year. Or you could say it has a more, the lower end of the range, kind of 0.5. So for every dollar that's raised in tariffs, it's about a 50-cent hit to GDP, which would then make it a lot more modest. And the real impact here, or the question is, to what extent there's uncertainty that really weighs on the economy. And being that Trump has pared back the tariffs, it suggests a slightly lower multiplier on this.
Paul, Gary out on the live chat on YouTube. I learn stuff on this. I'm sorry. Gary kills it. Welcome back to the Volcker era, young pups. It's coming. I mean, it's inflammatory.
Exactly.
But I'm watching the 30-year bond here. It's 5.13%. It's not Volcker, but it's a shift, to say the least.
Eric from the back room writes in, Anna Wong is arguing tariff revenue will neutralize the deficit impact
That's
of
my
the
next
tax
question
bill.
to Stephanie.
Wow.
Thank you, Dr. Wong, for getting, we got help from Gurl. We got help from Wong today. It's just too much.
Everybody's piping in.
Tariffs bring in money, right?
They sure do.
Where's it go?
So base case is that tariffs bring in $300 to $400 billion a year, which is not nothing. It does help to offset the deficit impact. Granted, the deficit's still going to be somewhere between 6 and 7% over the next decade. So it's really not great. In a positive scenario, maybe you're in the 5% range, but you're certainly nowhere near the 3% that Besson has been targeting.
So what does Fed Chairman Jay Powell do? He looks at this legislation today. He says, does it change his outlook at all about how he thinks about interest rates for this economy?
Yeah, I think at the margin, it reduces the odds that the Fed's able to cut this year.
Okay.
We technically have 2 cuts on paper, but the odds are certainly lower than that rather than more. So especially when you think about the sort of the net impact of tariffs, which now there's a lot less uncertainty, right. There's less concern around empty shelves, which makes the consumer more likely to spend. And we have a bit of a fiscal stimulus this year helping to offset some of the tariff drag. And then next year, we're just talking about net fiscal stimulus. So growth potentially above 2%.
A special edition of Bloomberg Surveillance,
Fantastic.
Historic moment for those waking up across America. At 2 minutes to the hour this morning, Nathan Hager on air. The House passed this historic tax legislation. Thank you, Terry Haynes and David Gura for wisdom here, and Stephanie Roth briefing us right now with Wolfe Research. And Anna Wong out moments ago with an extensive note, including work, Paul, from the Yale Budget Lab and the Tax Foundation. I mean, Ernie Tedeschi and the team and Maya McGinnis, these are our budget people, folks. We will have them on air in the coming days. As Eric mentioned with the team, Dr. Wong, Paul, mentioning, you know what, tariffs bring in money.
They do. And, maybe it's the tariffs plus this House budget could be near deficit neutral, according to Anna Wong. So, Stephanie, what's the next data point for you? What's the big issue for you to see where this economy maybe tips on the margin over the next 6 to 12 months? What are you looking for? Is it
I thought you were going to say 6 to 12 hours.
Yes, exactly. Is it labor? Is it the Fed? What are you looking at?
The next thing to watch out for is labor.
Okay.
So one thing that we're watching, especially after the Supreme Court ruled on Venezuelans that their TPS is going to be expiring for them, which was a hawkish outcome, that suggests that the program CHNV, Cuba, Haiti, Nicaragua, Venezuela, is about 500,000 people.
Whoa.
That's held up in courts. Trump tried to end all of their visas overnight. This suggests at the margin that these visas might also be ruled in a similar way, such that we might lose about 500,000 people from the labor force overnight. So the thing that we're going to be watching from the labor market reports is what's happening with the foreign-born workforce,
right.
And are we starting to see non-farm payrolls shift down substantially because of the slowdown in immigration?
Stephanie Roth, bond strategist with us. I got a 10-year real yield, not breaking out yet, but at 2.23%, up substantially off of the negative 1% COVID thing. I'm not back to a 4% real yield of the year 2000, but do you just assume a higher inflation-adjusted yield dampens business? Or is that an animal spirit that folds into nominal GDP? Yeah,
I mean, I think it could dampen to some extent, but for now, we might be in an environment where growth is actually just surprising to the upside.
The growthiness, that's what President Trump's betting on, is the growthiness is there.
Yep.
And that might be the case. I mean, even though we're still talking about 1% GDP growth, it's not that great for this year. But for next year, looking ahead, growth might actually be pretty decent.
20 seconds, what are you writing about this morning? Just give me a theme here. I don't want to take it away from Wolfe Research clients, but what's a number one message from you this morning to your clients?
The main message we wrote about this morning was on the reconciliation bill. The main thing is there's hidden sort of spending here in the sense that a lot of the provisions end after 4 years. But if they are extended, which is largely the assumption, that's an additional $1.25 trillion in addition to the price tag of this bill. This is what the bond market probably doesn't like.
Stephanie Roth, love this.
You're listening to the Bloomberg Surveillance Podcast. Catch us live weekday afternoons from 7 to 10 a.m. Eastern. Listen on Apple CarPlay and Android Auto with the Bloomberg Business app. Or watch us live on YouTube.
Russ Brownback joins us. To say he's at BlackRock is barely descriptive of the huge perspective and the intelligence of his note. The fancy title is Global Macro Positioning Team, which means at Hobart years ago, he's the one that bought the cases of Jenny Cream Ale.
In college, I went up to visit a high school buddy of mine in Hobart, February. It was the coldest weather I've ever experienced. I was darn near in Canada, I felt like what am I doing?
That's
cold and dark.
Cold and dark, exactly. That's where Russ spent 4 years at Hobart. So, Russ, what are you doing with this market here? I mean, there's so much uncertainty. We've seen the equity markets go down 20%, retrace a lot of that. We had a crazy Treasury market a couple of months ago. How are you guys just sitting back and saying, where do we want to be positioned in this kind of environment?
Yep. So this is the Super Bowl for macro.
Okay.
The uncertainty, and by the way, the uncertainty's been with us for several years. I mean, we had a historic Fed tightening cycle. We had a regional banking crisis that was scary in the moment. We had an acrimonious historic election last year, and now, a uncertain period as policy gets rolled out. And so, it's a wonderful opportunity in fixed income. You all on an earlier segment were talking about high real yields. It's an incredible opportunity in fixed income markets to harness very attractive income and do so in a very optimized way, high quality.
But wise one, folks, I can't say enough about the acuity of his note. We could literally do 1 hour with Russ and go 2 sentences by 2 sentences through the intelligence of his note. Okay, that's new money captures a real yield. New money captures a 10-year yield of 4.61%. Wow. But the old money's seeing price go down. Do people take losses? How does, if you're in JGB 20-year, you got a loss. In the U.S., you got a loss. Do you take losses here?
So again, you're pointing to the tactical opportunities that exist. The way we position our multi-sector portfolios is to avoid those longer duration assets that have all that volatility today. And if you're in the front to the belly of the curve, and then you're marrying corporate credit and securitized assets on top of that, you're getting enough income where you can ride out short-term periods of volatility that give you price losses from one day to the next. Over the course of the year, that carry just builds up nicely.
How do you, this is like with Ira Jersey here, it'll be the same question. How do you feel the losses in long-term paper will clear? Just to go to Friedrich Hayek, on a Hayekian basis, what's the process to clear a 20-year yield loss?
I actually think that question was answered in 2022. That was the year that the aggregate index, as a proxy for the fixed income market, it broke. It had its worst down year in a generation. And so here we are 3 years later, and everything seems to be functioning reasonably well. So I think we've learned that lesson. You always like to say, as the x-axis extends, you have more certainty.
God, Lisa, somebody listens to the show. Okay, is the x-axis, folks, we're ripping up the script. Is the x-axis, given this legislation, given the uncertainty of the Secretary of Treasury and Trump, is the x-axis logarithmic, where there's a nonlinear dynamic in time right now?
So, again, I talked about it being the Super Bowl of macro. The ebb and flow, the narrative has been so negative, and yet underpinning all of it is, I think, an incredible positive story for fundamentals, particularly as it pertains to corporate credit, securitized assets, and the like. So, I love a wall of worry in markets, and I think underpinning it all is an optimism. We talked about it a lot late last year. We forgot all about it. All we talk about is what's scary today.
How about credit here, Russ? How much credit risk are you guys taking at BlackRock these days?
So the credit markets are higher quality than they've really ever been, certainly in my career, and they're supported by really profound technicals. Here's a great statistic for you. So for your cocktail party statistic.
Exactly, I need it.
Okay, I'm finally listening. Go.
Yes. The entire high yield market, the index market capitalization, $1.4 trillion. The Treasury market grows by that size every 9 months by virtue of the deficit. So it speaks to the deficit of yielding assets in markets today. And when you marry that with really solid fundamentals that underpin credit quality, it's really just about where is optimal. So, back when spreads widened in the tariff event of April, we wanted to move into high quality assets that had widened a significant amount. Those have retraced. Now we're thinking about moving down the stack a little bit opportunistically, taking advantage of technicals and those positive fundamentals.
How do you guys deal with private credit? That's been such a growth story over the last 15 years. That wasn't early in our careers. We didn't have really private. We had private equity. We didn't really have private credit. Now it's become such a big asset class. How do you guys think about that?
It's another awesome opportunity for us. We don't really make much of a delineation between public and private markets. You look first and you say, am I getting enough risk premium on the asset? And secondly, am I getting enough illiquidity premium? And if you are, then it belongs in the portfolio.
To the work of, this is at Fidelity years ago, the giant George Vanderheiden, and I think of Jeff Vinnick and others, the parlor game of buying a 20-year zero. Are you so optimistic about total return, price up, yield down, that you can speculate on a long duration zero coupon bond, full faith and credit?
So, again, we're going to look for the optimal opportunity set. We don't think it's at the back end of the curve. I will say There's a lot of bearishness about term. It needs to be more term premium. That's a very popular trade today.
Yeah.
Another great statistic, only 8.7% of marketable treasuries are 20 years or longer. If you think about the long aggregate index, 20 years and longer, it's less than $3 trillion in market capitalization. You think about long duration assets, pension funds, insurance companies, estimates of around $5 trillion. The technicals are pretty profound. So you can push the long end of the market down in a speculative way over the short run. It's really hard to keep it down. And you've seen this is the third sort of bond vigilante scare, quote unquote, we've had over the past 3 years. The first two didn't really play out. My guess is that this one won't either.
Russ, Tom and I have been talking about over the last several days that 30-year Treasury, which we don't talk about very much, but the 30-year Treasury is now 5.14%. What does that tell you?
Well, so I think if you are a long duration asset allocator, 5% for the 30-year Treasury or a 30-year corporate that might yield just 6% is pretty attractive.
Yeah.
Relative to the opportunity set, if I'm thinking about a 60-40 portfolio that's optimal, I want to own that front to belly expression that I talked about with corporate credit and securitized. And if I want a long duration asset truly, I'm going to buy equities. So the 60-40 portfolio kind of gets you the best of both without owning the long.
Again, smart people like you come in here all the time, and I hear that consistently. I want to own the short to the belly of the curve, not necessarily take the duration. Who's buying the duration if you guys aren't buying it?
Well, so
I hear anybody coming in here and say, I love buying long duration bonds.
I think that there are a lot of asset liability managers that need long duration assets. And so you think about, again, your insurance companies, your pension funds, and to them, 5 or 6%, you think about what was possible in the decade leading into the pandemic, looking at the long bond with a one handle,
Sure.
This is a much better environment.
Nobody wanted to talk to you back in the day.
Yes.
You didn't have any.
No, we were nerds for a long time.
Off script, but nevertheless, Germain, how do you fold the Japanese challenge into our full faith and credit U.S. market? George Saravelis at Deutsche Bank links in the Japanese people saying, okay, I'm out of full faith and credit U.S. I'm coming over to Japan and I'm going to get a strong yen because all that money's coming back. Do you buy the thesis?
So it's a very different thesis. That their fiscal dynamics are, far worse than they are in the United States. They've just come off of yield curve control. They're going through quantitative tightening, and they're bringing short-term interest rates higher in deference to finally a normalization of inflation higher. It's a different set of circumstances there. Again, I'm going to turn it to what we do in the U.S. We're looking at opportunities. If you take long Japanese government bonds and swap them back into dollars so that you don't take the currency risk, you can get over an 8% yield. So we're looking at the world through the lens of what's optimal in building our portfolios today.
Hugely valuable. We'll feature this on Single Best Idea. Russ Brownback with us with BlackRock today, just encyclopedic. That was just absolutely wonderful.
This is the Bloomberg Surveillance Podcast. Listen live each weekday starting at 7 a.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. You can also listen live on Amazon Alexa from our flagship New York station. Just say, Alexa, play Bloomberg 1130.
Terry Haynes joins us now with Pangea Policy. I can't say enough about his public service out on LinkedIn, not only doing his consulting with Pangea and all the fancy stuff he does there, but he's been very generous out on LinkedIn to explain this moment. Terry, we're going to be with you in a bit, and I've got David Gura here with his expertise to ask some questions as well. Terry, how will the Senate take this football from the House?
Well, I think they take it very much in their own way, Tom. There is no requirement. I mean, you've teed me up with Civics 101, so here I go. There's absolutely no requirement that the Senate take the House bill as anything definitive at all. It has passed the chamber with all Republican votes, and they have a tiny majority. But the Senate will do this as they wish. And I think what ends up happening here is they end up softening some of the harder edges. So I think you see a lot of the debates about the harder edges around things like Medicaid and phase outs for clean energy subsidies, things like that. Softened. Secondly, I do think you get a little bit of a nod to the rising bond vigilantism by some additional additional cuts to make sure that there's a little bit more deficit reduction, and part of that, I think, for your audience too, means that you've seen the high watermark of SALT, because what that means is because they needed SALT to get votes in the House. They don't need SALT to get votes in the Senate. So
right.
So SALT's back in the firing line.
The president seems to have a great affinity to the gentleman from Louisiana, much more of a distant affinity to the gentleman from the Dakotas. What's the power that Senator Thune has in this debate?
Well, he's the chief cat herder, frankly. This is a unique process, again, for your audience, because this reconciliation process is unique because it's pretty much the only legislation where you need only bare majorities of the House and the Senate in order to pass something. So you don't need the usual 60 vote roundup that provides a modicum of bipartisanship. What you need is 53 Republican senators, and that's pretty much it. So he's the chief cat herder here. But the Senate's not like the House. The House is a very majoritarian institution. Think of the Senate in this case as 53 CEOs, all of whom's desires and whims have to be accommodated.
So it's like, Paul, it's like a 10 at the Masters.
Right.
That's, I guess, what it's like. Across the nation, we say good morning to you. We are thrilled at this historic moment with the House passage of the bill David Gura understands and I don't, that we have Terry Haynes with us with Pangea Policy, a special edition, certainly a special moment for Bloomberg surveillance. Sweeney and I were like, we have no clue what we're talking about. Bring in an adult, David Gura with Terry Haynes.
Terry, it's great to talk to you as always, and I'd love to kind of linger on the deadline for all of this if we could, so we have a House Speaker who managed to get this through by the deadline that he imposed. Looming large here, of course, is that X date, the need by which the lawmakers have to raise the debt ceiling before the warning that we've gotten from the Treasury Secretary. How much of a forcing mechanism is that going to be? How do you see this playing out over the course of the summer?
I'm a big fan, even in my personal life, of the adage that work expands to fill the time allotted. Certainly that's how the Congress operates. So what you get is a situation where whatever the X date is kind of the ultimate backstop. But I'd urge folks to look at this in two ways. The X date is the ultimate backstop, whatever it is, August, September, maybe even late July. But the other backstop, I think, and the more political backstop is July the 4th. The reason why I say that is that you've seen out of the House urgency to try to get this done, and momentum, and building momentum to try to get this done. The president will certainly want to push on the Senate to keep that momentum building and keep a fire lit under them. Number one. Number two, how the White House sees this, which is not irrelevant, is that July 4th is kind of a great X date, because what you're going to have on July 4th is three vectors. Potentially the tax bill passing, but also for markets, the announcement of a lot of trade deals. Hopefully that happens before then, but you'll see a lot of trade deals and a lot of economic stimulus coming out of those trade deals. And at the same time, the report on reciprocal tariffs will come through. So you've got all these things that they hope combine to provide more of a direction for the economy, an answer for rising bond vigilantism, and the idea that what you're going to see is an economic boost out of all this.
I'm going to guess the president didn't stay up through the night, but we know he gets up for surveillance every morning, so he's likely listening and watch this vote unfold. But I want to ask you, Terry, if I could, just about sequencing here, to use the Washington word. Now, there's been a lot of criticism here that the White House pushed for tariffs and trade modifications before they focused wholly on this bill. Now, with the benefit of hindsight, was that a mistake? Have we overplayed that, or was this a balancing act that the White House was able to successfully execute?
I think a little bit more of the latter. I wouldn't call it it's an incomplete success at best, but certainly they avoided the worst of a lot of the tariffs and put themselves on track to negotiate a lot of these major bipartisan deals. I'm not cheerleading when I say so. It's just that's the way the markets reacted ultimately. But I urge people to consider that for example, with China, what that is a pause. Everyone wants to say knowingly to themselves, to each other and themselves, well, Trump's backed off now. It's all good. Well, these are all the same people that didn't think Trump was going to do what he did in April to begin with. So I'd urge some caution there. But the way they look at it, and I'm not absolving them by saying so, I'm just saying the way they look at it is, he's got between now and next November when he doesn't know if he has majorities or not to accomplish a lot of things. So it was very important to get as much going as possible, and that's what they've done.
Across America, a conversation this morning with David Gura of Bloomberg News and Terry Haynes of Pangea Policy. We'll welcome all of you, particularly across YouTube. Subscribe to Bloomberg Podcast. It's our new digital distribution. Did a thing with Pimco last night. Major shout out on Sirius XM. Do you listen, Paul?
Sure, absolutely.
On Sirius XM 120, 121. And I don't look like Howard Stern. I mean, it's not gonna work. But we're thrilled to have Terry Haynes with us for this special edition of Bloomberg Surveillance. Green on the screen. The market does a little better right now. The VIX 20.32. But, Paul, as you jump in here with Mr. Haynes and Mr. Gura, the 30-year bond is a higher yield.
Yes, it is.
Over the last 20 minutes, rounded up 5.11%. House hunting this weekend is going to be challenging.
Yeah, a little challenging. I'm not refinancing the mortgage on the Jersey Shore compound. Hey, Terry, the Senate gets back from a well-deserved break on June 2nd. Then they're going to look at this bill. What's the Senate going to do with this bill, Terry? How does that work?
Well, they'll take it up in component parts. There's no requirement they take anything the House gives them, and they probably won't. I think what they end up doing is softening the edges on a lot of the harder things that needed to get done in order to attract Republican conservatives. Okay. Give them a fig leaf. Give them a fig leaf for fiscal continence, if you will.
Terry, I have to interrupt. The Speaker of the House is speaking. We always take someone from Louisiana over Terry Haynes. Here he is, Speaker Johnson.
We're going to celebrate a new golden age in America. Thank you for being here. I will yield next to our leader, Steve Scalise.
And of
course, Thank you, Mr. Speaker. And as the Speaker said, it truly is morning in America again. When you think about all of the work that's gone in to putting this bill together, it's one big, beautiful bill for a lot of reasons. There are a lot of really important wins for the American people in this bill. And we had 11 committees come together and meet in hearings. Some went on over 24 hours. Rules Committee went over 20 hours. You had, of course, the Budget Committee. Chairman Arrington is the lead author of the bill. All of the people that had to come together in our conference, and I think a lot of you know we don't all think alike. Democrats made it very clear they didn't want to have any part in helping get America back on track again, but we were never deterred. When this bill could have failed 10 times over, we said we were going to get this done, and failure is not an option, and we meant it. We knew we were fighting for the families who've been struggling for way too long under the failed policies of Joe Biden and all the Democrats who did have control of Washington for too long. We watched higher interest rates and higher inflation and lower wages and a demise of the American dream that we knew should not be permanent, but was only going to turn around if we passed a bill to get America back
Steve
on track.
Scalise, I should say, back-to-back Louisiana here. Paul Sweeney and Tom Keene, Lisa Mateo, patient with a data check coming up here in a bit. And, of course, Michael Barr with news, including the difficult murders in Washington overnight. The special edition of Bloomberg Surveillance. We're focused on Washington. Good morning, 99.1 FM. Nathan with a great job earlier in the morning.
Yeah, fantastic.
I mean, briefed in like way better than we are. We have David Gura with us, who's smarter than we are. Also, Terry Haynes, patient to be with us as well. Terry, color the moment here where the House has two leaders from Louisiana versus the Allegiant Senate. Like, does the House leadership talk to the Senate? What's the body language and the white marble at Capitol Hill?
Oh, sure. They talked to the Senate quite a lot. I think Johnson was over in the Senate as recently as Tuesday, briefing senators on progress, and of course begging them to take the House package, which they won't do. So, but he's got to do that. Yeah, they talk. They talk a lot, but the thing with politics that I think a lot of folks don't understand is that. No, it's just it's combat even when you have even when you're jostling around with friendlies. It's elbows up hockey or elbows up basketball. Pick your sporting metaphor, but you've got to fight for every inch, right. And the House's job in most legislation is to overreach. You've got kind of a purist imperative where you consciously reach for too much, knowing you're going to get rolled back into the middle. And that's the Senate's job, is to roll back into the middle. So and even in a reconciliation process where only the Republicans matter, that's exactly what they're do here, because they've got a different calculus among their 53.
David Gura, quickly here, before you go to Terry Haynes, give us a vignette, David Gura, of your last week of covering Washington. One little interview or one little moment where you were like, are you kidding me?
I went down to Washington and sat down with the chair of the House Budget Committee. This was before the votes that took place over the weekend. And it was clear just in that conversation, he's somebody who exudes a lot of confidence, is Jody Arrington, who has a lot of confidence about what he's able to do. But you saw in that committee in stark relief just kind of the spectrum of Republicans in this day and age. And so he had to deal with Chip Roy, a very conservative member of the House, trying to get all these folks in line. And I know that we had Terry Haynes here saying that John Thune's job is to be the chief cat herder. There are a lot of cat herders on Capitol Hill, and the chair of the House Budget Committee has been one of them, but he's gotten this through. Terry, let me ask you just about the Medicaid issue in specific, because I think this is the one that's likely to be a hot button issue in the Senate as well as it was in the House. Is there room? Is there a sense that senators are going to find it palatable to put in these work requirements to make the kind of changes that we saw Republicans in the House agree to make?
I think they do. I think the requirements get softened to some extent, though. The mistake, again, in my Civics 101 role this morning, I think sometimes people make the mistake of looking at these things in silos. In other words, all that matters is the Medicaid things. Let's talk about that. They had a bogey to meet in the House, a specific number of efficiencies that the committee that oversees Medicaid needed to make. They met that in part through the work requirements and everything else, but I think the Senate approaches that with a lot of skepticism, and I do think a lot of those things get softened. You've already had noises from a lot of relatively moderate Republican senators to that effect, that they're concerned about how those work requirements and other things might roll out. They'll want to make sure the focus truly is on what the president calls waste, fraud, and abuse. They'll generally be okay with that, but if it strays out into substance, the Senate's going to be foursquare against that, not just because they want to keep the program's focus intact, but also because they understand that the Republicans generally in the midterms pay a large political price if that's not so. What they need to be able to do is to go out when this bill is done and say, look, we didn't touch Medicaid's substance. All we're doing is creating efficiencies in how the program is administered. And there's certainly need for that, they will say. So, and we've fixed that. I think that's going to be the Senate's function. And if to the extent that they lose some savings there, they look for savings elsewhere, which is one reason, as I say, I think things like SALT are at risk.
Terry, how big of a win is this for President Trump?
It's a big win, and that's and being able to herd these particularly fractious cats, get things done and get them done on time with the creation of some momentum around this. In the first half of the year, when by comparison, the 2017 tax bill took literally all year. It didn't go to final until December. That's a big accomplishment. That shows a lot of urgency on the part of Republicans. So that's positive for them. Trump's trick now is to keep the fire lit under the Senate and make sure that he doesn't need to use the ultimate backstop of the the debt ceiling X date as something, but it can actually roll that forward and make that happen even faster, which probably helps him economically as well.
Worldwide, Terry Haynes with this Pangea policy, and David Gura of the Big Take in Bloomberg News. Gura and I and Lisa were in awe of a disciplined Paul Sweeney. He's yet to ask about salt.
Oh boy!
I mean, and for those, it's just not New York, Paul. It's California and 4 or 5 other states as well.
Matt Miller's been pounding on the window here of our studio asking about salt.
You can't shut him up.
Exactly. So Terry, I mean, salt's it's a big issue. Where are we on this? So Terry, how does this salt situation stack up?
Well, I think it's, I think, and I told markets yesterday, I thought that what they had to look out for here is, not taking their big salts and going away, but because I think the world in the Senate's going to be light salt or no salt, potentially.
Really?
I think they probably make a nod to it in the end, but much less. And the reason's simple. The only reason why salt is even in this bill is because of politics. They need to get a few New York, New Jersey, California members on board, and but that really doesn't exist in the Senate. Today, I'm not aware of a single senator who it's a make or break vote for. And of course, all the blue state senators are all Democrats. So there's no need to coddle there. So I think you have a haircut here from what's in the House bill.
Hey, folks, it's a clinic with Terry Haynes. I can't say enough his efforts out on LinkedIn. Just literally, it's worth it to sign up for LinkedIn just to get Pangea policy and the daily briefs from Terry Haynes that you see out there. Terry, thank you. Generous of you at this historic moment to be with us.
This is the Bloomberg Surveillance Podcast. Listen live each weekday starting at 7 a.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. You can also watch us live every weekday on YouTube and always on the Bloomberg Terminal.
Mark Douglas is the CEO of a company called Mountain, and the company just went public today. They're going to start trading today. MNTN is a ticker symbol. They raised $187 million. They sold 11.7 million shares at $16. So a solid start there for Mountain. Mark's on the, I believe, the New York Stock Exchange floor right now. Mark Douglas, CEO of Mountain, joins us. Mark, talk to us about the IPO process here. What was the message you guys were delivering to prospective shareholders here during your IPO?
Well, I think the key message was that we had created a new segment of the television advertising market where we're bringing small and mid-sized companies into the market for the first time on our platform, where they can advertise on TV the same way they could previously do on search and social. And so our customers have responded to that, and we're very pleased, like all the investors we met with on the roadshow responded just as well.
When you go into a meeting, do you take Ryan Reynolds into the meeting?
Well, he showed up on the teach-in. With the first day of a roadshow, you meet with all the banks and all the people, and he was there. It was a pretty fun meeting, so we had a good time.
So what's the distinction here? Help Paul and me. We're out on YouTube. It's building every day, Mark. We're just overwhelmed by the, as Colin of the Twins says, the discoverability factor. How is ad revenue going to fold into YouTube creators, whether they're hipsters like Lisa Mateo's kids or they're fossils like me and Paul Sweeney?
Yeah, so YouTube, something like YouTube, it's not competing with something like streaming television, which is the market that we're in. It's actually, people are just expanding their entertainment consumption. So more people watch TV a day than use social media. It's the highest engagement channel of any entertainment medium. So you see streaming growing. Obviously, YouTube, social all continue to grow as people just consume more content. And as a result, companies or small, mid-sized businesses can now connect with those people and do that with Mountain, do that obviously with Google and so forth. So it's great for everyone.
Mark, the month of May is a very important part of the year for global television business here. We have the upfronts where the broadcasting cable networks and pretty much everybody else out there is trying to sell ad space. Shows everybody what they're going to be broadcasting in the upcoming year, and they ask advertisers to step up and commit dollars for the upcoming television season. How were the upfronts this year, and how would you characterize the upfronts this year, and what are advertisers thinking about with maybe some uncertain economic times?
Yeah, so I think the advertisers are there for the upfronts, and the thing that I think the whole industry is really excited about is live sports on streaming. So you see ESPN and other networks really focused on live sports is kind of number one conversation I have with the leaders at these networks. And so I think the upfronts will be fine. I think our customers will do great. They won't participate in the upfronts, but they'll participate in the availability of live sports. It's kind of the year of live sports. So that's what you're going to see.
Mark Douglas, thank you for the time. He's the Chief Executive Officer of Mountain, the symbol MNTN, with their initial public offering today.
This is the Bloomberg Surveillance Podcast. Listen live each weekday starting at 7 a.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. You can also listen live on Amazon Alexa from our flagship New York station. Just say, Alexa, play Bloomberg 1130.
Lisa Mateo, here she is with newspapers.
Okay, this is going to be all about the wellness hour. Okay.
Oh, he's killing me.
As she eats her
Fruit Loops. Help me here.
Captain Crunch.
I'm all about the wellness. So this is a story from the New York Times about those wearable devices. You heard of like the Aura Ring, the Apple Watches, the Fitbits, okay? So these are devices that track your biometric data, right? You have body temperature, heart rate, blood pressure, how much REM sleep you get. But a lot of users say they enjoy it because it keeps them on top of, all their data. But others are saying it's starting to make them anxious. They're getting a little bit compulsive, like they're checking their stats all the time. They're freaking out. They're trying to make an appointment for the doctor. The doctor can't see them, so then their stats get even worse. So it's becoming this whole phenomenon. I'm like, yes, it's great, but does it also make you a little bit too self-conscious?
Oh, what?
Of course she does.
One? Do you check all the time?
She's got the watch on her wrist.
I have the watch, but I just use it to track like my workouts.
We have two iWatches at home.
But
We have two iWatches at home that sit on the table. We couldn't figure out how to do it. It's too complex.
I mean, it's pretty good. Like the heart rate. Like if I ever feel my heart kind of pacing, I'll check it. I can do it, here on my watch and just say.
And then what do you do?
And then I just
do what you
take a
always
breather.
do. You take a breather.
Exactly.
Jesus,
I'm glad that my heart was pacing Gigi Hadid when she was wearing Miu Miu at the Met Gala, and thank God I had my Apple iWatch to save me.
Exactly.
There you go.
10,200 steps on Tuesday. How about that?
See? And how do you know that?
Do you need to do 10,000 steps
I walked to Penn Station.
that is the
Coach
recommended.
Mateo?
That is the recommended 10,000 steps a day.
Do you do 10,000 steps a day?
I do. I walk to and from the train, subway, back home. Yes, I do.
She's a beast.
And the workout steps count too.
Way too much of this.
Okay, this one's a tough one. Okay, so we were talking about the Knicks-Pacers game, right? Okay, a lot of people paid some big bucks to watch the Knicks lose at the Garden. It set a record for seat prices. So this is according to Boardroom. They pointed to data from TickPick, and it shows the average price for ticket to Game 1 at the Garden, record-setting $1,193, making it the most expensive NBA Conference Final game ever. Now, if you look at it just getting in the door, okay, the current get-in price for Game 1 was $580. That's nearly double the price tag for Game 3 over in Indianapolis. Right? So it's just the anticipation, right? We've been talking about this. People have been waiting for this time, and they're willing to pay whether they win or not.
I've been to like 2 games in my life. I'm ignorant. Paul, is the magic of the NBA, there's no boards and glass between the fans and the ice?
And there's no
like
mask
football.
on the player, Tom. There's no mask on the player like
exactly.
football. And so you really get to know who these people are. And
it's almost like a gladiator thing. You're right there.
And the NBA does a great job of developing and celebrating and highlighting and showcasing their stars, whether it's Michael Jordan or LeBron James or Steph Curry or whomever. They do a great job doing that. And it's after the NFL, it's the NBA.
Game 2 Friday.
I was looking at StubHub for the next game. Courtside, $11,000.
Oh, there you go.
Per ticket.
Then at the top, per ticket, at the top, way at the top, just over $700. Tickets still available.
Okay.
So.
Okay.
There you go.
One more story. Slip it in here quick.
Okay, I'll slip it in here. Okay, so Wall Street Journal says you can still negotiate a best and final offer, even though it's a competitive labor market. Even if the salary is set, they say there's other places for wiggle room. So they say ask for things like signing bonus, more flexible schedule, bigger title, maybe an extra week of vacation. Some people are doing like as is, but with an agreement to revisit this later. But they say it's not something for everyone. You have to really be competitive and be in there. Yes.
This is the Bloomberg Surveillance Podcast, available on Apple, Spotify, and anywhere else you get your podcasts. Listen live each weekday, 7 to 10 a.m. Eastern on Bloomberg.com, the iHeartRadio app, TuneIn, and the Bloomberg Business app. You can also watch us live every weekday on YouTube and always on the Bloomberg Terminal.